All attendees are in listen-only mode.
Good morning, everyone. This is Mark Raymakers with Insurance Agency Marketing. I want to thank you for taking time to join us here this morning for a new webinar we've got here today. I do see some new names, so thank you for taking time to join us here. Every Friday morning at 10 a.m. we like to have a single premium life webinar. We dedicate our Mondays towards traditional life insurance. So we do both, obviously, single premium and traditional life. And we've dedicated a day, Friday, for single premium because it has been consistently the fastest growing, the most tremendous growth we have in sales. And so obviously with the baby boomers, the way they are, there's so many of them that are retiring. There's a lot of assets out there that seniors are passing off, not as efficiently as possible, but through the use of single premium life, we're helping them to do a better job of that planning. So today's webinar is going to focus on some different strategies and tools. What we see a lot of times is agents are not really quite sure how to get started. So we're going to go through a number of things here today. We're going to show some things that we've shown in the past, kind of as a refresher for some of those that have been here before, so you may recognize some of these slides, but there's some new things we will be covering today. It is a recorded webinar, so we'll be emailing this over to you as well later, so you have a chance to review it again to pick up some new ideas. And so let's go ahead and get started here this morning. This should be a pretty quick webinar. Real quick, I'm going to tell you a few things that we do here at Insurance Agency Marketing Services to support you. And one of the things that we have such a great response to is our Life and Annuity Training Academy. So what I'm going to do real quick here is I'm going to put a poll up here, and all I want you to do is reply yes if you are interested in knowing more about this opportunity, or yes if you might want to attend an event. So what we do is we host these training events. We've got one that's going to be coming up here in May. We don't know the exact date yet, but we do know there's some availability for us to go ahead and do one of these in May. We do 3 of these a year. At least 3, sometimes 4. So what we do is we provide for your airfare, your meals, and your lodging to come into this training event. We have speakers coming in from across the country to share some of the most successful sales ideas and concepts for both life and annuity sales. So if you're looking to boost your sales on either side of your business, whether it's life or annuities, you're certain to get some great help here. You're going to see some discussion on products. This is not a product training. This is a sales and concepts and marketing. And so we will talk about products to complement the sale of whatever strategy that is we're talking about at that time. But I don't want you to think you're coming in to learn about product, because that's not what this is about. That's not why we do this. With that said, you're going to have a chance to also talk with a lot of top advisors that are in the field as well, just like yourself. So there's a lot of great marketing and sales ideas that are shared within. So again, what we do is, I'll tell you a little bit here. We fly you in on a Wednesday. We'll get you there Wednesday for late afternoon, kind of an evening get together. We'll have something to eat. We'll have a few short presentations there on Wednesday evening, then a full day of training on Thursday, and then a half a day training on Friday, and we'll get you back home. So obviously there's a little time out of the office, but it is time very, very well spent. That's one of the things I hear from agents that attend this all the time, that it is certainly was a great event for them. Commonly hear this is the best event I've ever attended. So if you mark yes, what will happen is we're going to email you an agenda. We'll email you an application for completion so we can get you on the list of interested parties. And maybe the May event doesn't work for you. So what we'll do is we will email you when our next event is coming up after that. So by marking yes, at least you're in the know. As far as when it's coming up, what's going on. We'll cover some of the issues with DOL. So long and short of it is, we're going to give you a lot of great information. They're going to help you for 2017, and we'd love to see you there. So, all right, I'm going to go ahead and I'm going to close the poll out here so we can move on. And if you decide that you want to go ahead and attend the Academy, just go ahead and type Academy in the question box, and we'll get that information over to you. Okay. So we have a new producer bonus, and basically the way that works is, for today's purposes, when you see $100,000, we're going to consider that to be $100,000 in single premium life, $300,000, $500,000. At the $100,000 level, so you write $100,000 single premium life, you have the option, of course, this is all in addition to your commission. You have the option to take $750 in cash bonus, or a 2-year subscription to website newsletter service. Now we can go ahead and you can purchase that as well. And Josh in our office can get you set up in one day on that. So if you're in a hurry, you want to get a website set up, give Josh a call and he'll get you taken care of there. Otherwise, you can earn that. We'll cover your costs for 2 years. Or there's the iPad. I personally like that, especially the way companies are gravitating towards these e-apps or iGo apps or however you want to refer to them as. The iPad is certainly a great way to do it. You don't have to worry about carrying a bunch of forms around with you and omitting or forgetting something. You might just wait till you get to the 300,000 level, at which point you could choose a full Social Security program with 3,000 piece postcard mailing. Of course, you can buy that as well. You can call our office. We can get you set up there. Or there's 2,000 matching marketing money to promote your business, or a $1,500 gift card. Now, many of you may want to wait till you get to the 500,000 level. Again, that's 500,000 single premium life, or 500,000 annuities as well. Or traditional life has a certain percentage or ratio to that 500,000. But with that said, you can choose either 5,000 piece mailing and seminar coaching with Matt Gill, or 4,000 piece mailing and seminar coaching with Dave Pimper. Both of these gentlemen do a great job in seminar presentation. They will actually be at the Academy. They will show you their presentation. They are very good at what they do, and so obviously we've provided some opportunity for you to earn their presentation as well as the mailing and coaching. If you choose not to take either one of those two, then you can take advantage of the Ritz-Carlton Travel Rewards program, make your own personal getaway. Okay, we do have a trip going on. This trip, as you can see, will be February 25th or the 28th in 2018 at the Scottsdale, Arizona Boulders Resort and Spa. Beautiful location. If you look at the bottom qualification with a combination of any of the following. So annuity, single premium life, traditional life, Medicare Summit, long-term care. If you specialize in just any one of those, or maybe you do all of them, that all count towards the trip. Qualification period started July 1st of last year, goes until December 31st of this year. So plenty of time to qualify for this trip. We'd love to see you there. Real quick here. Our website is going to make your life easy in that there's a lot of different things that are on there to support you when our office is closed over the weekend, or maybe when you're in front of a prospect or client and you need some information. You can see here there's our term quoters out there. So if you were to ever call us for a term quote, that's what we're doing, going right to our website and running it. So it's very simple. Of course, it's there all the time for you. All the forms are online, industry links, current life and annuity news. Looks like that got cut off. Got to fix that. Our life products are out there. Our annuity grid's out there. So certainly encourage you to check out our website. All right, one more thing before we get into the meat of the webinar here. We're going to talk about the referred producer program. So just like you, we love referrals. Once you send in someone, they get contracted, we're going to send you a check for $50 and then 20 basis points on everything they write. So if they're writing $1 million in combination of single premium life and annuities, 3 producers is going to yield you $6,000 in cash. And that's going to continue to come your way as long as they're producing. And then a marketing reimbursement. Let's see here. What do we do here? Someone said, okay. There we go. Thanks for your feedback. I thought I closed that out. Apparently I did not. Okay. So, marketing reimbursement program. This is a neat thing. I think a lot of agents are unfortunately not taking advantage of, but the marketing reimbursement program, basically the way it works, if you write $100,000 in single premium life, we're going to put $200 in a reimbursement account for you. Of course, that's the same for annuities, and it's a percentage of that, or $10,000 in target gets you $200 in marketing reimbursement. So what happens is you put that in an account. That sits there until you want to use it. So for example, a lot of our agents will put together a customer appreciation over the summer. And let's say you spend $1,000, you send us the receipt, we're going to turn around and send you a check for $500, 50% of whatever your expenses are based on what you have in your account. So if you write $250,000 in single premium life, that's $500 that goes into your reimbursement account. And it sits there until you're ready to use it. I know there's agents that have thousands sitting in their account and they just haven't used it yet. They're waiting for the right opportunity. So keep that in mind as you look to place your business with IMES. We do provide you that excellent benefit. Okay, so here's our agenda for this morning. And again, we're going to go through this fairly quickly. We're going to talk about who's a prospect. Who do you need to be looking for? And then how do you get in front of those? So whether it's your clients or your prospects, what can we do to help you? And then once you do get in front of them, what do you do next? I think that's the other thing is we have this question, well, what do I say? What do I do? we actually have some different things. So for every point I'm going to discuss here this morning, we pretty much have whether it's a marketing piece or it is a piece for you to study. For example, right now I'm holding in my hand a piece I'll go through here in just a minute with you. But there's a lot of stuff that we can provide to make it easy for you to get into it. And once you do, you're going to find out how easy it is and maybe generate a lot of sales. We're going to talk just briefly about products. I'll give you an idea. I'm not going to talk about any company's products, but I'm going to talk about some parameters, some things to look for so that you're familiar when you're sitting in front of a client or prospect, if they're going to fit in the mold or not. We want to look at the single premium life players are. Who do we use? We'll talk a little bit about handling qualified or non-qualified opportunities because you can do both. And you know what? It's so easy. And I'm going to show you how easy it is here towards the end of the webinar this morning. So let's go ahead and get started. So who is a prospect? Who do we want to be looking for? Whether it's a client or it's a prospective buyer, someone we haven't sold to yet. I really think that anybody who's in this business, in the insurance business, has opportunities in front of them. But here's some areas. If you specialize in any one of these, whether you're Medicare, you're a life insurance agent or long-term care agent, or you're selling annuities, the opportunities are endless. So first of all, if you're selling annuities or if you're sitting in front of a client, you want to find those clients or prospects that have annuities they're not going to live on. And you should have a pretty good feel. In fact, they can probably tell you as well if they've got a pension or they're drawing Social Security or they've got some other investments out there. They're probably going to have a pretty good solid feel whether or not they're going to touch all their dollars. And annuities are one thing that seem like they sit there and they're passed on to the next generation in a taxable format. So obviously distributions are taxed as ordinary income to the beneficiaries. And so that's something to mention to them, that if they die, they pass that annuity on, they're going to pay some taxes on it. Increase in face amount living benefits offset surrender charges. So for those of you might be asking yourself, well, I really don't want to move that annuity into a single premium life because, there's going to be some surrender charges. So the products that we have, some of them have bonuses which help offset those surrender charges. So that's very positive. We've got products that'll do 12%, 10% bonuses. So that will help make that a little bit more appealing. I've actually had agents that have started to sell single premium life are kicking themselves because they had clients that put their money into annuities and wish they'd have known about single premium life earlier. So this is where we say, hey, let's look at the surrender charge you have. Maybe we can make that a little bit more attractive by providing an increased face amount as well as a bonus to cover that surrender charge. We always want to make sure we're talking about the savings and checking accounts and CDs. See if your clients have that out there. I've been in the field myself, and I've seen clients that have an exorbitant amount of money in savings and checking. For example, I had a client that had $1 million in their checking account. So, if we're really not asking about, we're probably overlooking it. So we want to look for those clients with excess funds and savings or checking accounts or the underperforming CDs, which most CDs out there today are doing that. As we know, they're getting minimal interest, taxable growth. And a lot of times, this is funny because I've heard this. I was an investment banker. I was in the field, so I've done both. And one thing I found out when I had CD clients come in is they tell me it was kind of the rainy day money. Well, what does that mean? Well, the furnace goes out. Maybe I need money for a car. Maybe I need to pay taxes on something or another. Or, you know what, I'm going to use this to cover my final expenses. So there's a better place, and single premium life can address all those. If you're selling Medicare supplements, and this is a great way to get in front of people. We'll talk about this here in a minute. But clients paying premiums on old policies, a lot of times if they're given the option or the choice to consolidate and eliminate or reduce premiums, they're all in for that. And so that's where we look at single premium life. A lot of them have those old whole life insurance policies. They may be paying some premiums on, or the UL policies. They do like to eliminate the premiums and have a paid up policy given the option. So that's where we want to keep them in mind. Life insurance clients, we see a lot of this. We have a lot of agents that call in talking to us about clients that have universal life policies that are in trouble. And the reason primarily is because when they first took the contract out, they're paying a much higher interest than they are today. And figuring that only 51% of the agents go back and see their clients, 49% of those with those policies or more probably are in trouble and they don't even know it. So that's something you just want to make sure, whether you're a life insurance agent or not, ask them when the last time was they reviewed their policies, because chances are if they've got one of the UL plans, they're probably in trouble. Remember, there's no guaranteed death benefit on those older UL policies, but today with the single premium life, if they want to do a fully underwritten single premium plan, we can do that. At least we're going to guarantee them a death benefit. Again, they do also have the desire for consolidation and premium discontinuation if they can. And through 1035 exchange, we can put it into a single premium contract. And lastly, long-term care agents. In fact, I spoke with an agent this morning. That's what he does. He focuses primarily on long-term care, but he's had some declines in the past. So with that said, if we can insure that client for life insurance, that's going to get them some long-term care benefits because the companies accelerate the death benefit tax-free for monthly long-term care payouts. And again, a lot of those clients that you talk to, you ask them if they're interested in or concerned about long-term care. A lot of times they don't want to buy it because they're afraid, obviously, if I don't use the contract, I'm going to lose what I put into it. And again, then one of the big things too is they just don't want to spend $400 or $500, whatever, for a standalone plan. So for those of you who sell long-term care, you know it can be difficult. Okay, so how do you get in front of them? Well, here's a number of things, and these are just really simple. But if we're looking at our clients, the first thing I always say is when I'm talking with an agent, do you have a client management tool that you can go in and do a search? Can you look for your clients that are turning age 70? Can you look for your clients that are retiring this year or maybe just turned 65? Those are some of the different things you want to look at. Why do I say turning age 70? Probably a lot of you have already picked on this one, but once they turn age 70, this is the year they have to start considering or taking out their RMDs. So we're going to look at their qualified accounts. And obviously the way we're getting back in the door is say, hey, look, you've got those qualified assets that we've helped you with. We're going to have to start sitting down and figuring out, taking out RMDs. And in the process, that's where you're going to go through and you're going to talk to them about the additional assets that they have that they're not drawing an income from. And so that's where we're going to look at the single premium life. We're going to determine whether or not they need those dollars or not. And one of the things I'm going to ask you, if you ever call in and ask for a life quote or single premium, I'm going to ask you, do they need income or not? Because if they do, single premium life isn't necessarily the best solution for them. Again, the retirees, this is the time they look at their assets. What do we got coming in? What do we got going out for expenses? So that's one thing. And then what I do have is a pre-approach letter with a couple different marketing pieces you can send your clients if they're 70 years old this year. And, I always like to think if you don't have a real good relationship with your existing clients, at least by sending them a letter and including a piece in there to get them thinking about their assets and what's going to happen with them when they pass away, this kind of opens the door for you to go in and have a conversation with them. And with prospects, kind of the same thing. Some of the things that I've seen work from other agents I've talked to is they'll go to senior living facilities. So if you're asking yourself, who do I go see? I already have my clients. Maybe they're good prospects for single premium life. Maybe they're not. So we're going to carve those out. Let's say if you wanted to start fresh and find a place to go. And some of you may have some good ideas as we go through this webinar as far as what you have done or what you think you could do in your community. But some of the things I've seen that work are going to the senior living facilities. I'm not talking about long-term care facilities. I'm talking about the senior apartment living where they're done mowing the grass. They're done scooping the snow. They just want a place to live where they can go and have their meals down at the cafeteria and hang out with some other seniors, play cards, do whatever it is that they do. They're in good health. They're just done doing those things. So that's a great thing. If you can talk to the program director, which some of our agents have done, they might do a bingo. They might play some kind of a game, but then they do a 10 or 15-minute presentation on their assets, about planning for long-term care, because they're concerned about it. Ask them. They'll tell you, yeah, they're concerned. And some of these facilities now, you'll have the senior living apartments right across the street from the long-term care facility. So they're looking at that every day thinking someday I might end up being there, and how are we going to cover that cost? So that's one thing. Churches, I've had other agents that will sit down and they'll do a presentation for the churches or the church that they're in. I do have agents. In fact, one of our most successful sellers of single premium life purchases Medicare supplement leads, goes and sees them, and in the process he's real good at fact finding. He uncovers opportunities out there, and already this year he's sold I think $500,000 in single premium life to Medicare supplement clients. Annuity seminars are another great thing, because obviously a lot of times when your senior client comes to these seminars, they're thinking they're going to put money into an annuity, but in the end a single premium life makes more sense. So those are just a few things that I've seen work as far as prospecting, getting in front of them. So now what do? I'm sitting in front of this client. I really don't know what to do. I don't know how to get the conversation going. So here's a couple things. We do have some marketing pieces that you can mail to them. So if you wanted to take advantage of it, you can. The other thing that we do is we've got a lot of different fact finders. And what I can do is I can provide you some of those different fact finders. Of course, before we start sending all this information out, we want you to be contracted with us, because that's how we're going to really get you to going in this business in the right direction as far as complementing what you're doing. So we do have some fact finders. Some of them are 1 page. Some go all the way up to 10 pages. Now, I don't know that you want to go that in depth, but the nice thing is through the fact finders, you're going to find where their assets are at. Not only are you going to probably be writing some more business, whether it's annuities, if you're managing money, you might be able to put some in some different conservative funds for them, maybe some income funds, whatever it would be, but you're also going to find assets that are going to be great for single premium life. I have a senior questionnaire. I'm going to show you a couple of these things here in just a minute. The senior questionnaire really asks them some feeling questions. It's going to ask them, what are their concerns? What are their frustrations about this point in their life with their assets, from paying taxes to lazy money, to their fears of going into a facility. But this senior questionnaire is going to get the conversations going, and it's going to drive you towards some sales opportunities. I am also going to show you a personal arrangement guide, which has been very successful as well. So I'm going to show you these here in just a second. But one of the pieces I'm holding in my hand, I don't actually have it up on the screen, obviously, are some questions that you can talk to your prospect or client about that get the conversation going. So for example, this is one of the things that are, we've got a father-son team. We're going to try to set up a webinar here with them at the end of the month in February. But they do a lot of business, and one of the things that they do is they use long-term care as kind of their last attempt to get a conversation going, to get an appointment. And basically it's as simple as, are you concerned about the cost of long-term care? And have you done anything to protect yourself or your spouse in the event of a critical or chronic illness in a long-term care facility? And they say unanimously that senior prospect or client says, yes, I am concerned. We really haven't done it because we can't afford to spend $400 or $500 a month. But they might have $100,000, $200,000 sitting aside somewhere that they could put into a single premium plan that would provide them those benefits. So anyhow, I've got a long list of different things you can discuss with a prospect or client to get him interested, get him talking about it, so it's a smooth transition and it's not uncomfortable for you. So as far as different things you can take in, again, this is a 1-pager that I mentioned, kind of like a fact finder. Really what it does is it's going to open up the opportunity to try to find some assets that might work well for a single premium sale. This just so happens to be one that we have from Baltimore Life. And Baltimore Life, great company. They'll go all the way up to a table 8. We'll talk more about the underwriting here in just a moment, what that all means. But you can see this is pretty simple. You can have this right in front of you and fill out the information that's going to help you determine, are there assets that are available for single premium life. So that's one thing. Here's a senior questionnaire I was visiting with you about. So it's going to obviously address certain things like long-term care, their current assets, their taxation, legacy and final expense concerns, and then their safe money. These are some things obviously that our seniors are concerned about. So this form is available to you as well. And I've gotten some very positive feedback on this because it does help get some questions going. And each one of these questions on here drives towards an opportunity to sell single premium. Okay. Yeah, John's asking, can you send the question form in that? Yep, I can. Obviously, again, we want you to be appointed in order to provide you all these things, which I think makes sense. Now, this personal arrangement guide, this is a neat little piece. It's fairly lengthy, but the whole idea behind this is, and you can see this, all this blue area, once we email this to you, you can type it in. And what you want to do is you want to make sure, I personally have this for my wife, but what you want to do is you want to make sure you put the client in there, the address, but you want presented by in there. You want to make sure that when your client passes away, that survivor calls and talks to you about helping with these final arrangements. So if you look real quick, there's some information on here I think is pretty helpful. And I really like this as well as a referral piece. So we cover a lot of different things in here. It's kind of nice when you're sitting there, your survivor's sitting there at the funeral home doing planning, but you're going to gather information. Who are their children? If you haven't met your senior clients' children, this is an opportunity for you to do that. Those are some great prospects. Keep one thing in mind too, is that when both of your clients pass away, you're going to be delivering a check to one of them, if not all of them. So I think it's nice to have the opportunity to get to know them. So we talk about funeral preferences and requests, but the other thing I think is important is pallbearers. Pallbearers are usually someone that's really close to that individual, obviously. More prospect opportunities. Please notify these people at my death. More prospect opportunities. So those are people that are near and dear to them. So here we go. We're going to look at the, down here we have checking accounts, credit cards. That's probably not as important, but checking accounts. And then on the next page, you'll see the different places for IRAs, investments, annuities, CDs, life insurance policies, etc. They may not even be able to tell you who their agent or advisor is. But what you're doing here, this is just another simple thing for you to obtain information as far as where are their accounts at, and has anybody reviewed them? I'll never forget my neighbor, older guy. He had a lot of money in mutual funds, but he never really talked to his advisor. And he was telling me that these are an aggressive growth funds, and he was 70 years old. I said, Paul, you really need to sit down with your advisor and tell them that you want to look a little bit more conservative, because it was around the time that the market was doing so poorly, with 2007, 2008, and he was losing a bunch of money. And so it just doesn't make sense for a guy who's retired to have his money in an aggressive account that's just sinking like a lead balloon. So anyhow, long story short, get back to this is your opportunity to make sure that they're looking at their accounts and they're doing a good job with them. And here's the opportunity for you to come in and see if you can give them a second opinion. Okay, let's look at product details real quick, because this is important to understand who's a prospect as far as when you run into somebody that might be a good prospect, what are your product parameters. So I'm speaking in generalities here. We've got a dozen different, I'm going to show you here in a minute the companies we have. So I'm just going to go into product details here. But generally speaking, the issue ages are going to be from 50 to 85. We do have some carriers that'll issue on brand new, the newborns. In fact, we've got 3 applications coming in here next week for an agent that wrote them on 3 little kids. So you can do something. Grandparents are doing something nice, putting $2,500 in a contract per grandchild. So that's a neat little deal there. The maximum premium is going to vary by carrier. So some of them based on the net amount of risk, which is the death benefit minus the premium. There are those that also look at a maximum death benefit. The client can't have any more than, say, $450,000 or $750,000 in death benefit. I also have another carrier that'll take over $1 million in premium. So that's something to think about, is that we've got all kinds of opportunities. We've got options for you. Minimum premium varies by carrier. Some of them we have a minimum face amount, so whatever it takes to buy 5,000 death benefits. Some of them have a minimum of 5, some 10,000, some 25,000 minimum premium. It's kind of all over the board there. Underwriting. Table 4 is a standard issue. So for those of you that are not real familiar with table ratings, so you figure there's a 25% markup per table, generally speaking. So you know that at a table 4 standard issue, every client that gets approved is going to be considered 4 tables or within that 4 table range. And so what does that mean for you? Well, the senior clients, we know there's already probably some health issues there. So we're taking into consideration that with their health being the way it is, we're making it easy for them. We're getting them in the contract. Some of them will go up to table 8. And these are not medically underwritten. So there is no exam. You don't have to worry about it. It's much like writing an annuity. And so to go and you look at that table 4, we don't have the advantage of the fluids or someone coming in and checking your height and your weight and all that. We just have to expect that the client's going to be honest when they tell you they're 6 foot, 250 pounds, whatever it would be. And generally they underwrite mortality, not morbidity. What does that mean? Well, so if you look at, let's take long-term care, for example. Some of the products that we have, they underwrite whether or not they can qualify for the long-term care aspect or for the life insurance aspect. A good example is the MoneyGuard product. They got a great product, and we do a good bit of that. But sometimes what happens is the client will not qualify because they don't qualify for long-term care, so then they would be declined. Most of the companies out there underwrite just for the life insurance, just for the mortality. So if you've had the money guard declines, or you've had the long-term care declines, we have companies that we've been able to put them in, still get them the life insurance, and still get them some long-term care benefit. So keep that in mind. Benefits, return of premium. So what happens is your client puts some money in, they decide in a few years they want to bail out, they get their money plus their interest on it. Long-term care and home health care benefits. Again, that's one of the main draws to single premium life, is the fact that your client might have $100,000 in annuities. They take that and they put it into single premium life, and now they have 150, 200, whatever it is, depending on their age. They get a big bump in value, and now that's coming to them tax-free each month if they need someone to come and take care of them, or if they need to go to a facility. If they don't use it, it goes tax-free to beneficiaries. Very attractive. And as far as liquidity is concerned, in addition to return of premium, there's free withdrawals up to 10%. So if your client in, say, 5 years says, hey, you know what, my furnace just went out, I need to buy a new furnace, they can go in there, they can take out a free withdrawal so that they can pay for that cost. They can transfer qualified and non-qualified benefits, and I'll explain that here in just a minute, because that's a big deal. There's a lot of qualified assets out there. Your clients don't want those RMDs, they just stick them in the bank and contribute to their lazy assets, I guess you could say. Okay, so here's the primary companies that we do business with. We have a couple other ones out there that are not listed, like Gleaner, Security Mutual Trust. They've got single premium plans. There is another carrier. I can't let the cat out of the bag yet here, but we do have another carrier that's going to be, actually two of them will be announcing single premium life products that they'll be launching this year. Now, one of them I didn't mention in here. We can do a single premium up to age 90 with John Hancock. We can do a single premium with North American that's fully underwritten. So those are some things to think about as well. If your client's healthy, we can underwrite them and get them into a plan that's going to get them a good death benefit with accelerated benefits. So let's look at here. I mentioned qualified or non-qualified assets. So what happens is a lot of times you've got those clients, they've got money sitting in an IRA and they really don't need it. And so once they take the RMD, they end up sticking it in the bank. Again, that's one of the first slides I went to initially, was going to your clients. Who's a prospect? Do that research. Find out anyone who's 70 years old, because they have to take their RMDs this year. So what happens is, when they don't need those assets, they're not going to live on them. They're going to pass them on to their kids. We don't want to pass them to the kids as is. When those kids inherit it, as you know, that's all part of their ordinary income. Could put them in a higher tax bracket. Chances are that that client of yours, their beneficiary children, are in their peak earning years. I've heard some nightmares, some horror stories about the amount of taxes that are due on these assets that have been passed on to the kids when they inherit them, and their kids are already in a high income bracket. So keep this in mind. Okay, so what happens is, we'll take that money. Let's say, for example, it's in an annuity. What we do is we do that rollover into a single premium immediate annuity. Now, these are combo products, okay? So your clients can't effectively buy them as standalone policies. They are together. They're linked together. So the single premium immediate annuity will generate payouts depending on the product that we use, depending on what option your client decides to go with. We can do it over 3, 5, 7, or 10 years. 10 years is the maximum. So every time a single premium immediate annuity payment comes out, it's taxable. They get a 1099. But what happens is that SPIA goes directly into the life insurance. So again, depends on how many years we're funding it, but the client never receives a check, nor do they have to write a check. It's automatic, okay? You get paid one time, okay? And so, again, they get 1099 at the end of the year for that SPIA payout. The carriers that we have right now, in fact, I actually neglected to add one on here, but Baltimore Life, Equitrust, National and Western, they have these products where it's a combo plan. You get them together as a SPIA Life combo product. You do the paperwork at one time. And the other thing I didn't mention is all the single premium plans, you complete the application, you do a phone interview. Some of them approve it on the spot. Some of them it takes a week. Sometimes it just might take a day. We actually have some, we submit the application, the clients approve the same day. So we can do something with qualified funds. Non-qualified is pretty much every other single premium life product. On the previous page, I showed you the different carriers. They'll take single premium on most all those. And obviously for some of them, if the client's not concerned about taxes that are due, we would do it, surrender the annuity, put into single premium life, pay the taxes. Now, there are times when your client has got a tremendous growth over and above the cost basis, which means that's taxable. So we could put it into one of the plans I mentioned up here, the Baltimore, the Equitrice, or the National Western. You could use those products. So don't feel that you're kind of painting yourself in a corner there by only being able to offer a true single premium. If they're trying to disperse or distribute that taxation, they can do that over a 10-year period and still get themselves a single premium contract. I mentioned it's so easy. It's very simple. And the reason why I say, or the reason why I have this slide up is I would say that a higher percentage of the premium that we see come in comes from agents that have written a lot of annuities. Now, don't get me wrong. We've got a lot of life insurance agents out there that do this as well. But the dollars that are coming in more times than not are coming from annuities or inheritance. So plain and simply put, if you can sell annuities, you can sell single premium life. If you look at each one of these points or commissions, up to 15% was SPL. There's no suitability. Turnaround time is 1 week. I've seen them, again, as I said, same day. There is a return of premium. There's a premium bonus. In fact, that premium bonus on the annuities is lower than that. But this is a piece that I'd sent out a while ago. Guaranteed interest rates, 3%, no physical exam, 10% free withdrawals. There are loans. There are accelerated benefits, charge back up to 2 years, issue ages 0 to 85. We do have some that go 0 to 90. Tax deferred, tax-free transfer at death. So if you're selling your clients annuities and you talk about these points at all, some of them you're not going to mention, obviously, because it would be an annuity sale, but the simplicity, the fact that you get a certain commission, the concerns that you might have as far as chargebacks, your clients are interested in tax deferral. The nice thing about these here, obviously single premium life, is they have a tax-free transfer of death. So if they never use the accelerated benefits, they can pass it off tax-free to the beneficiaries. So it's simple. If you can sell annuities, you can sell single premium life. So why should you be selling single premium life? Well, first and foremost, we're helping our clients. If you ask them if they're concerned about the cost of long-term care, if they've done anything about it, if they say yes, and I'd be willing to bet you that most of them will. Now, some of them obviously have a lot of assets they can self-insure, but the average run-of-the-mill, I think right now, is concerned. They don't want to use a bunch of their assets now because it takes away from their spouse's retirement one day, potentially. So you're able to show them that they can reposition assets to get them long-term care and home health care, as well as a tax-free death benefit without having to pay for it. It's just moving the money from one pocket to the next. And remember, they have the return to premium feature on these. They have free withdrawals. They can take loans. So it's very liquid. It's not like the policies that they learned about years ago where you had to die to use it. It can also reduce future taxes for beneficiaries as well as themselves. So I mentioned that a little bit already, how the inheritance plays out. As those assets continue to grow, that is taxable, anything over and above cost basis. So we can stop the bleeding there potentially and put it into one of these plans. It can also help you through a slump. I've been in the field. I've talked to agents every day of the week. They'll tell me it's a little slow right now. This is an opportunity. One thing I learned from a quarter of the table, top of the table MDRT producer, he says, see the people, see the people, see the people. Always go out and see somebody. If you're down, if production's down, if you're in a slump, go see a client. It's a great opportunity not only to get some activity going, get a referral, but also talk about how else you can help. I got a new product I want to talk to you about. This is something perfect for you, just what you've been looking for. It also helps you find annuity sales. I can tell you right now, there's a lot of times when an agent's going to go out and do a review with their client. If they're not doing them now, they find more opportunities. And when I talk to our most successful advisors, they tell me that more times than not when they go see a client, that client shows them some more money that they have. Maybe they inherited something, or maybe they've got a family member that they would refer over to you. And it really, again, helps solidify existing client relationships. If you've got a good relationship with your client, they're going to send you referrals. And if they're not sending referrals, you got to ask yourself, is the relationship very good, or am I asking? Because I do believe that with a good relationship, you're going to get some referrals. And up to 15% commission, you make money on annuities that aren't paying you future commissions. Because once you write an annuity, you're not going to get any more from that client unless you go back in 10 years beyond that surrender period and show them something new. And so it's obviously an opportunity for you to make more money. This is why a lot of agents never go back and see their clients, because they've gotten paid. They're done. They're not going to go see them. So Okay, with that said, question box is and has been open. So that's all I have for this morning. Now, again, if you want to take advantage of some of these pieces that we have here, there's some things I didn't show you. We have some calculators. What I mean by that is I've got a form that I've created where whether it's you or you have an office administrator that knows your senior clients or can do a searching of your database, and what you can do is you can look at that and say, gosh, you know what, this Joe and Mary have never touched this annuity. They've been retired for 5 years. What you can do is you can put those on a list, and you put the annuity value in there, and it shows you what the taxes would be if they kept it, and then if we put it in a single premium life, the benefit that they could receive. So there are some neat little tools there that are available. We also have one that shows the cost of keeping it in annuity versus putting in a single premium life. So there's a lot of tools I didn't show you because that would we could take a few hours going through some of the different things that we've created here. So would certainly appreciate an opportunity to help you on any single premium cases. I can tell you that we will be calling you here. If not by the end of the day, we'll certainly get a hold of you on Monday sometime. But yeah, we just want to spend a couple minutes with you, see if you have any questions, if there's any opportunity for us to help you. You know, obviously the first case is always the hardest. I'll tell you, I mentioned one of our agents that's already sold about $500,000 this year. He came one day, called in on an annuity flyer that we'd sent out. And you want to talk with one of our annuity guys? I asked him if he had done anything on life insurance. He said, yeah, but I'm not doing that anymore. I don't want to mess with the underwriting. So long story short, he wrote $1.5 million of single premium life in his first year, going back to his existing clients. Needless to say, he and I are pretty darn good friends. And so keep that in mind. You know, it's just a matter of writing your first one and knowing what to look for. And that's what we're going to help you do. So you can certainly call us here. You can ask for Life Marketing. My name again is Mark Raymakers. Otherwise, you can certainly expect that we'll be giving you a call here within the next, whether it be today or Monday. We will be reaching out to you. So, okay. Well, thank you so much for your time this morning. I would encourage you to check out our website, go to our monthly webinar calendar. If you see something out there that you like, go ahead and register. We'll send you the recording and do whatever we can to help you succeed, whether it be through your life or your annuity business. So have yourself a great weekend, and look forward to visiting with you soon. Thanks.